So as a normal everyday person that's trying to build wealth, right? What does this mean to them? Like these are, very high level conversations, when it comes to Fed, non-Fed, gold, crypto, back forth, what's going to happen politically, all of these different things. Like how does the average person, like, how do they approach this journey? Like, even, there's people that are saying, well, what do I do with my career, right? If I was making good money, 12 months ago, and now I'm making 20% less, right? Against, the where the dollar's gone. And that's where I think we're at. I think we're at a 20% change, across the board, even though they say it's, far less than that. What do they do? Or what does a person who's been in the stock market and they're riding the yo-yo, that they've been riding, what does a normal person do? I mean, what do you think?
Well, I mean, I'm not allowed to give advice, but I'll give
Of
you,
course.
I'll lead by example and kind of give you that. So I mean, take all this with just, this is my view. I think really the most direct point of influence, the thing that affects people most on the day-to-day, average American across, working hard, the most important thing to look at is interest rates. Okay, interest rates is I'm going to call it a temperature gauge of what the economy is doing. And we've seen what happens when you have times of interest rates spiking, which is what we're currently starting to see now. We're going to see a rise in interest rates. That's the thing, which is the silent thing that sneaks up on you. You just don't see it. And every American's exposed to it, either through, your debt load, if you're servicing, if you're, obviously, if you try to lock in at a low rate, it affects your real estate purchases. And if you're servicing something and you're not locked in at a rate for the next 30 years or so, and suddenly you're exposed to a 10%, mortgage or whatever thing, whatever line of credit you might be having, that's gonna strangle you. And I think if you're trying to time the market, if you're trying to time, gold prices, if you're trying to time crypto prices, you're nothing more than a junkie in Vegas, because it's a fool's game. You never will. My view is that, in times of uncertainty like we're approaching, you just basically stay course and you don't alter. And if you've got good financial advice and you got a portfolio that's a basket of index type instruments, like things that are component on the Dow or the Nasdaq or whatever it might be, the long term of those picks of stocks in the indexes rides out. You will, in the long term, you'll benefit instead of trying to time these things with swings by selling something and trying to buy cheaper. You can't do that, because it's
People
just
are so fickle, right? And like, we
totally.
talk with investors all of the time, and they get hit and then they pull out, and then they're, and then they want to try and make up what they lost, and so then they start putting back in, and we see it every day.
Yeah,
We're not a stock company and those kind of things, but we see it with our people investing, into the REIT and within the real estate world we're in every day. And I see people constantly, it's like you said, like a junkie, and they get caught into the addiction, and they also have a very difficult time just surrendering to the loss, and then they fight to come back, and they're fighting a game they're not pros at. And then therein lies becomes the challenges. Can the stock market be beat? Yeah. Can crypto be beat, with trading it and those kind of things? Yes, it can. But if you're not a pro, are you going to beat it? Unlikely. It's like, I can go pay $10,000 and go play in the World Series of Poker, but if I'm not a pro, if I'm not doing it every single day, it's a crapshoot. It's a very small % chance that I can go beat the pros. And that's what you're facing.
Yeah, you nailed on the head there. And the other thing that is different now to what it was, say, 5 years ago, is we have all these outlets for people to basically get exposed to the stock market or get exposed to investments which weren't readily available 5-10 years ago. So you have these Robinhoods or online brokerage firms. You have buying crypto through, what, Coinbase or whatever the hell you go and buy it on. It's created these virtual casinos, basically, for people to go and play at and take their hard-earned dollars and try to time the market. And it saddens me. It's not the way to play this game. If you have dollars set aside and you want to build wealth, well, you have to put it into, index type things and blue chips. And, it's the old Warren Buffett thing. You just buy it and you just put it away and you forget about it. Don't try to make timing on it. You don't know better than the market does. And by the way, you could have the best fund manager in the world that makes 80% one year and he's the fund manager of the year. Doesn't guarantee you the next year he's going to do the same thing. In actual fact, the numbers show that if whoever is consistently, if you have a really good year on the fund this is on Wall Street, the top fund manager one year is going to be probably bottom half the next year. It's just the way it works. So it's a fool's game. And again, I urge people to just think before they act, and just don't do it out of a mentality thinking you're going to get rich quick, because you won't.
Yeah. I mean, I talk with our investors all of the time, and, you know, we've been had a really, you know, great run through COVID and different things. So we're ninth quarter in a row, you know, with a stock increase, and that's pretty cool. You know, being a non-traded helps with that, with what we do in a lot of ways. But I look at our average investors, and I know that the first, you know, time, you know, we take a loss, right, in the next, you know, 2 or 3 years, let's say we have a 4% loss for a quarter, I know we'll have investors pull. And I find it fascinating because it's the worst time for them to pull. Because like you said, we've had, you know, we do have a rubber band effect, you know, oftentimes where the rubber band gets pulled and then it snaps, where we put a lot of outlay, and then that quarter is going to be, you know, tighter. And then the following quarter, we're going to reap the rewards, right, from the capital investment we put out. But it's fascinating because you see it every single time. And then I see, you know, the investors, you know, who you know, ride out the storm, you know, win big and win in, you know, incredible ways. But I think you have to be invested though into something that's real and tangible, and because there are companies that disappear, right? And so riding out the storm to the end of the time scares people when they looked at losing, you know, 50-60% of their portfolio in 2008 and 70%, you know, or you look at, like, you know, a Madoff thing, you know, that he pulled and destroyed, you know, people's retirements and wealth. But as you get through this journey, it's just fascinating as you see the investor mindset. And I think understanding the psychology of what people are going through every day, you know, makes a big difference. For you,